Welcome to the 40 Finance channel. Today we're thinking about long-term investing with the Mag 7 stocks. And for long-term in this case, I thought I'd put together just a simple conservative calculation on where these stocks might stand heading into 2027. Now this video comes in March of 2025. So to make it easy, we'll just say 2 years from now. Some of these stocks have different calendar dates in terms of when they report their earnings, but we'll just say the target is right around March of 2027. And right now is a really good time to do this, in my opinion, as far as looking out, because we've had a pullback in the market. So you can throw out a little bit of the sort of overvaluation numbers or the high multiples that we've seen from some of these Mag 7 stocks here recently, past couple years. And it's not to say that they're dirt cheap, but if we look at just the momentum, if we look at last price versus the 200-day simple moving average, all of these stocks except for Meta are under their 200-day. And when it comes to their current multiples, the forward PEs for all of these stocks, if you take out Tesla, and Amazon's right on the line here, they're all trending under 30 for their forward PE. Now, some true value stock aficionados might say a 29-30 forward PE is not necessarily super cheap. But what I'll add to the mix that you can see in this column here is that all of these stocks, except for Tesla, have double-digit growth rate for their EPS going forward. So obviously what makes the Mag 7 very unique is these companies are still growing, right? They're not just treading water. And even Apple, who has slowed tremendously over the past 3-4 years in terms of growth, their stock buyback program is so robust that it kind of helps them match, at least on a valuation scale, the progress on the EPS line that some of its competitors are doing. Okay, I'm going to click through each stock real quick and show you where I got these earnings estimates using Seeking Alpha Premium. If you're interested in learning more about the stock research platform, potentially supporting my channel as well, my affiliate links in the description get you $30 off as well as a 7-day free trial before your card is charged. So in Seeking Alpha, if you're trying to do this at home, you have the main stock page, very similar to what you're going to see on other stock pages, but we're going to go to the Earnings tab. We're going to go to Earnings Estimates. That's where we can see some of the more long-term estimates. And if we scroll down here on Microsoft, we're looking at June of 2027. So what's interesting that we're leading off with Microsoft, because you can see here that their fiscal year is definitely different than most companies. So they're running July through June. So there's a point in 2027, actually right in the middle of 27, that most analysts will start looking to 28. But since we talked about trying to target the March timeframe, give or take 2 years from today, we're going to use this number for the EPS estimate. Now, you might say to yourself, 2027, a couple years away, you know, how accurate is this estimate? And it's a very fair question. What's nice about Mag 7 stocks is typically, they're so popular that they get a ton of coverage. I mean, people are in the weeds on these Mag 7 stocks in terms of analysis. That's why I like to use them all the time. Right now, we have 29 analysts who are already projecting this number for Microsoft. The number is $17.66 for the EPS. For the calculations for all these stocks, as I click through these, I am subtracting about 10% off of that consensus estimate just to give us a very conservative take on where the stock might be in 2027. And the rationale for being conservative is, first of all, we're talking 2 years away. But secondarily, let's see out of Mag 7 who maybe is the safest bet, or, if two stocks are close to each other, you might decide that you feel more comfortable about Microsoft's business model, let's just say, instead of NVIDIA. And if the upside is very similar, then that's a choice you could make. Now, to be super clear and consistent with my channel, I think the QQQ is one of the best bets that you can make for long-term investing. Doesn't mean that you need to go all in on it. But if you have the Qs, then you are going to have all of these stocks most likely as well in 2027. All right, bottom line for Microsoft, 1766 is the 2027 estimate. We're going to take 10% off of that. That brings you about $17. And today's forward PE, which I'm going to be using today's forward PE when we get to the 2027 part. All right, next up we have Apple. And with Apple, we're going to use the fiscal period that ends September of 2027. So even though we're talking about March, and this number won't get reported till roughly November or so, I think analysts will be all in with their projections by that time. They come in at $9.08. So if you take off 90 cents of that for the conservative estimate, that puts you about $8.10, something like that. And their forward PE, similar to Microsoft, is coming in at 29. All right, let's talk about Meta. Their fiscal period will end December of 2027. So March, again, people are going to have a good read on where the company's heading. This EPS estimate stands right now at $33.58. So if you take 10% of that, you're right in the 30 range. And current forward PE is 23 times. Now we've got NVIDIA. NVIDIA, their fiscal period ends January of 2027. So realistically, and I don't think I did this on my numbers, you could be talking about Jan of 28 by that time. But for consistency, I did go ahead and use this number, but there's certainly an argument to use this one instead. But if you take 10% off of 576, then you're whatever, about 525, something like that. Their current forward PE is a 26. All right, what about Google? Fiscal period ending of 2027, current EPS estimate, $11.85. Take 10% off of that, you're coming in right around $10 or so. Current forward PE for Google, pretty crazy. It's actually below 20 at $18.39. All right, how about Amazon? Amazon getting a lot of press in the stock picker world here recently. And if we look ahead, fiscal period ending December of 27, you've got $9.49. So if you subtract roughly 95 cents off of that, I guess it puts you about $8.35, something like that. And current forward PE is 30. Finally, we have Tesla, and most of you probably know that Tesla is is a very interesting place in terms of brand recognition, if you will. But let's just stay consistent, go with what the numbers are. This would certainly be considered one of the riskier ones, just because people are doing vandalizing cars, stuff like that. I don't know where this one's going to go, but we'll stick with the sort of scientific method, if you will. And their EPS estimate is $4.60 right now for the period ending in December of 2027. Take 10% off of that. That takes, puts you right down to $4.05, something like that. Current forward PE is 88. But obviously with this one, you've got a lot of moving parts, but we'll see how it stacks up against the others. All right, here's your final tally. The Mag 7 in March of 2027. Conservative estimates with the EPS. If Microsoft holds true in its earnings estimates, they would likely exceed this number. Remember, because I was conservative. You have $16 times 29. That is $464 versus today's price of $385. That's a 27% increase over today. Next, you have Apple. Conservative EPS was $8.10 for 2027 times a 29 PE, puts you at $234. Current price is $213. That's a 10% increase over the next 2 years. Meta, $30 EPS, 23 forward PE. That's $690 versus $587 today. That's an 18% increase. NVIDIA. Now remember with NVIDIA, there was a couple ways to look at this. 525, I chose the ultra conservative view, which was basically one fiscal year ahead. But 525 times 26 on the forward PE puts you at 136 versus 116. That's only a 17% increase for one of the hottest stocks in the market. I think if you're going to get very specific about March of 2027, you could probably put $6 in here. And 6 times 26 off the top of my head is about 150, 156 versus today's price of 116. All right, Google, 1075 is the estimate. Current forward PE is 18. It's 194 price projection versus 163. That's a 19% increase over the next 2 years. Amazon, a lot of talk about Amazon being undervalued. I said that earlier. Current EPS projections minus 10%, of course, for all of these to be conservative. 805 times 30 on the multiple. That puts you at 241 versus 194 today, plus 24%. Tesla, the big X factor, if they keep making cars and avoid total brand explosion, then you could hit to $4.10. God knows if this 88 forward PE would continue, but let's just pretend it will. That puts your price at 360. Today you're at 243. That's a 48% increase. So looking back through the board, obviously you've got strong percentage gain on Microsoft. You also have a sort of level of safety involved with Microsoft. They also have a dividend. So that stands out to me as one of the safest picks. Coming down the line, though, NVIDIA, the number was a little squirrely because they report their fiscal year in January and we were talking March. So I was conservative on that EPS number. Otherwise, they would almost for sure offer the best upside. Unless, of course, you're more open to the sort of risk-reward scenario that Tesla has going on right now as far as a 2-year outlook. But bottom line, it's interesting to say, with the Mag 7 today, it almost doesn't matter which one you pick from a projection standpoint. There seems to be money to be made. And even if your choice was Apple, which is, barely 10% on the conservative scale, what do we know about Apple and their stock buyback program? And the fact that they're willing to pour anything that they have to in there to appease their shareholders. So that was a 2-year projection for these Mag 7 stocks. I would say conservative projection. Keep in mind that I took 10% off of their consensus EPS projections. The bottom line for me is you still see growth, real double-digit growth in the Mag 7 over the next 2 years. Because ultimately with the QQQ, the Mag 7 market cap weight is very high, but you still have 90-plus stocks underneath it who could switch places with any one of these stocks if they were to go on a massive run, very similar to what NVIDIA has done. So long story short, I think the future for the QQQ is on stable ground. That's not to say that there can't be big events in the stock market, but I would say that you can feel pretty good about DCA, dollar cost averaging, over the next couple years. Before you go, don't forget to check out that special offer for Seeking Alpha down below. Hope everybody's doing well. We'll see you on the next video.